Adam Gray had a goal. His goal was to create a firm that catered to contrary investors. Today, Orbis Investment Management is now a multinational firm, and my team and I are very proud today to announce that Orbis will be entering Japan through Orbis Access Japan. Catchy, isn't it? Now, let me introduce my brilliant team. I'm Dario Russo. To my right is John Martin, and to my far right is Jovan Badhan. Now, today I'm just going to take you through an overview and agenda of what we're really going to be looking at. So I'll be introducing the problem, as well as taking you through some qualitative analysis. Next, John will be taking you through a section of the analysis, as well as the recommendation. Lastly, Jovan will be taking you through the implementation and risks and mitigation. So just an executive summary of a high-level description of what we'll be talking about from top to bottom in our presentation. So the Japanese market is currently the third biggest economy in the world. And Orbis is given an opportunity to enter this Japanese market through either acquiring an existing firm or creating a new one. The bottom line of today is that we recommend that Orbis should enter the market by leveraging their existing online platform and creating a new business to enter this Japanese market. So what is the primary problem? The primary problem is how, it's essentially not a problem, it's an opportunity as to how Orbis should be entering the market. Should it be entering through existing, or purchasing an existing firm, whether it be Target Securities or another firm, or should they enter the market right away? And if so, how? So some secondary issues that I can provide with you today are the organization in Japan needs to be aligned with Orbis's goals and their philosophy, and this contrarian investor focus that they're catering towards. There are also no outside ownership, alignment of interest, individual accountability, and lastly, sustainability. These, all of these four facets are very important to Orbis, and we look to leverage them and include them in Orbis Access Japan. Lastly, a next secondary issue is the regulations. So currently there's a 1-year buffer time between applying for the license, or applying for the license and acquiring the license. So this is just an issue that we need to take in hand and understand really what's going on, and plan our implementation accordingly. Our next secondary issue is brand awareness and the competitive advantage that Orbis is bringing to the Japanese market. So we recommend for this solution is that Orbis should leverage their attractive structure, and as the fee structure that you're currently charging. We see this as an extreme competitive advantage because essentially Orbis does not make money unless it is successful in the market. The last secondary issue we have is the language barrier. Obviously these Japanese individuals need to be working with other Japanese individuals in Japan, so there needs to be, these individuals need to be bilingual to cater to Orbis's other companies in North America as well as Europe. So now I'm just going to take you through a Porter's 5 Forces industry analysis. What this shows is all of the forces that are that can affect Orbis through these 5 facets, and how strong are these forces. So at the top here, suppliers. These are the suppliers that supply the actual the security. So it's the brokerages as well as the banks. We've ranked this as low because there's many options out there, and they don't really have as much power in this market. Next is substitutes. So the substitutes are the self-managed accounts. So now with this point, the self-managed accounts are individuals who have a lot of time to manage their own accounts instead of associating themselves with Orbis. The next substitute are other investments, real estate, private entities, as well as commodities. These 3 Orbis does not currently have a vehicle for, so thus they are substitutes for the specific operations. We've ranked this as medium because these other investments can be attractive. However, Orbis's operations are slightly above them, so it's overall medium. To my right here, we have the threat to new entrants. Now, these are threats that other players can be entering into the market that you're currently in, or you're about to enter. So, like I mentioned before, there's that 1-year timeline from getting the JDSM license. There's also a capital requirement of $500,000. Now, this $500,000 is a minimum. However, we'd like to point it out here that it is definitely required. Next is the employee experience and the competitive advantage that through entering this market. The competitive advantage is key because there are currently 250 firms in this Japanese market, and they all need to have their specific competitive advantage associated with it. Overall, we've ranked threat to new entrants can be medium high. At the bottom there, buyers. Now, these are the individual investors that are buying the shares of Orbis. They're early to middle-aged investors. As that new tax facility that's been available to these Japanese investors has made it more attractive for them to invest their money and to save it. These Japanese buyers also have a long-term focus, which differs from other cultures. The Japanese culture is a very long-term based and focused. So just a quick fundamental analysis of Orbis Access. This is essentially creating the new company. We need to keep in mind of our target client base. This is the individual investors, this is the current competencies of the existing firm. So of Target Securities. So Target Securities' current customer base is the individual investors, the equipment leases, and they also do underwriting. However, the target client base is just the individual investors. So there's a lot of other operations that are going on when trying to acquire this company that we need to keep in mind that we don't, that Orbis is not as competent in. Lastly, we need to ensure that we retain the key employees. Next is purchasing or starting a new company. So Orbis needs that global awareness. Is currently a multinational firm, so we believe that it does have that very strong presence in the market. It's going to be difficult managing costs for starting up a new company, which we've accounted for in our appendices. There's also key individuals that we need to bring on and how to find and acquire these individuals. We see this as a challenge, but it's a challenge that we're definitely up for. And especially, we've pressed the bilingualness of these employees. This will allow for a much more smooth transition from the Orbis model. Next is to set up the corporate presence in Japan. And like I mentioned before, we believe that the current fee model that's being offered is very attractive, and we look to, we recommend that you leverage that in your marketing campaigns. Next is the lack of experience in the Japanese market. Now, hiring the locals in Japan will look to mitigate this risk. Now I'm going to pass it to John to take you through a technical analysis.
Thanks, Dario. So I just like to preface this saying that all the numbers that we calculated are in Canadian dollars. We understand you're based in Vancouver, so we wanted to basically have everything based in Canadian dollars. So with our technical analysis, we really did the two alternatives that were given to us, right? So we did going in with the Orbis Access option, where we leverage that online platform, or we're going to buy that Target Corporation. So we did a bunch of analysis, and it was in Excel, and we threw some spreadsheets in the back. But we came up with some key highlights we really wanted to show you in this section of the presentation. So we found a very strong revenue growth if you actually go in there by yourself. We believe that there's significant potential for your company to perform in Japan because of the alignment of the values, right? Because you're both two long-term focused entities, right? You have the Japanese culture that really likes to be in there. You know, some people say 50, 100 years, some of these investors are throwing that out when they're looking at investments, which is quite different than North America. And you know, we've seen that Orbis is really aligned with these long-term values, so we think that that really matches up. We did notice that there's a negative NPV value when you actually look at the next 5 years in this initial growth phase. Once again, we think though that there's more of this long-term potential, and past the 5 years and looking to see as Orbis evolves, we really kind of want to always keep that in mind. So on the other side of things, if you look at the target acquisition, we did a comparables analysis. We looked at our DCF and we looked at the change in net working capital on the balance sheet, and we saw the significant change in net working capital and came up with the negative free cash flow, which pushed us into the direction of looking at some sort of comparables analysis. So when we looked at the forward PE ratio, which was given in our material, we came up with a $9.6 million valuation. So we said, okay, if we want to go through and jump into this option, we can give a 4.2% premium and offer them $10 million. And just a couple other things about the target. We see a fairly stable $3.5 million. Remember, this is the Canadian dollars EBIT. So this has kind of been stagnant. There hasn't been a lot of growth that's been in the company itself. Actually, the last year in 2015, it started to come down a little bit. So that kind of tells us, okay, if we're going to buy this target company, we really kind of got to scrub and do some handiwork here, right? Like, there's no growth that's already in this acquisition, so we really have to kind of take charge of operations and really kind of pump that growth up ourselves, which, as we'll talk about later, we really don't want to do. So all these alternatives, I mean, this is just a nice kind of shiny slide, right? There's enter Japan alone, we go and enter the target, or enter via the target, or we just continue with the status quo. We do not enter Japan this time, and that's not the opportunity for us. So when we looked at our selection criteria, it really boils down at the end of the day to this difference between long-term profitability and short-term profitability. Because if you wanted to take on the target acquisition, you're going to have to work hard to streamline these operations and do that, but it is a good short-term investment. But if you think in the long term, at the end of the day, you're really going to get substantial value if you go into the market via this web access platform, which, by the way, is already built. You already have these two, you got the balance fund, you have the growth fund, you already have these allocations, and you have this web code and stuff, so that's really going to help you. We recommend that you enter the Japanese market through this online Orbis access system. In addition, we believe that you should transfer $10 billion of your $11 billion assets under management to Japan right away. First of all, that gets rid of the $500,000 capital requirement, and it shows you mean business. You mean let's throw a couple million in Japan and see what's going on. So what does that mean? What follows from that recommendation? We believe in our expenses and the stuff we kind of calculated and looked at. We think we need a $600,000 marketing program. We want to leverage all of our connections through the Orbis employees, the 400 Orbis employees that are already involved in the finance industries. I mean, I'm sure a couple Orbis investments know some people in Tokyo, right? There will be a little bit of a short-term hit because we do see a negative an NPV coming in for the initial 5 years, but I mean, the main point, and it's underlined here, is there's minimal maintenance costs and minimal costs to go enter this market. The coding is established. You have to hire the risk management compliance person. You got to get an office building, but it's not like a huge major endeavor where if we have to really bring in Japanese personnel and we're going to buy Target and we're going to go into that realm, we're really we have to meld with that Japanese culture. We're going to have to really we have to work really hard, and we want to test out the Japanese market with the system that we've already built, that's already been shown to perform, and that we can just quickly jump in, test Japan, and see what happens. Not to say that later maybe we won't go acquire something, but we think at this time it looks like the best opportunity is jumping in through the online platform. Through our analysis, we are assuming that Orbis will beat the market by 5% consistently. So this is obviously highlighted later in our risk and mitigations, but we believe that the reserve system that's currently set up by Orbis, all of our technical work was basically operating under this assumption. So this right here is the operating expenses. So okay, we want to do the online operating system. Okay, so what do you got to do? You got to hire this risk management professional. We think, to be honest with you, this 135 that's mandatory. You have to do this no matter what. You're going to need this person to get into the Japanese regulations. Office building, estimated 75, salary 600,000, we're, estimating maybe 3-5 people, you can kind of work with that, within that number. This online rate, that's not much, 1,500 here. And then the marketing program, we think 600,000 is a nice start, but obviously we can tweak that and our expenses towards the search engine optimization and all this as things roll out. So with that, I'm going to give it to Jovan, and he's going to go through some implementations and how exactly you can start this program.
Thank you, John. Well, just to start off with the implementation plan, the short to medium term is structured around 0 to 1 year. That is due to the fact that GST framework is going to take about 1 year to come into effect, and that's really important for us to do business in Japan. Without GSTA, we are not allowed to actually even enter the market and compete with the 250 other firms that Dario talked about earlier. So first off is to apply for GST regulatory framework, and then after that, we're going to really prepare for Japanese version of the website, dependent on the fact of how confident we are with how GST framework is coming along, and if we will be able to meet all the requirements that will allow us to enter the Japanese retail investment market. And then leading into the later part of 2015 and early 2016, we're going to start the hiring process for Japanese employees. And like Dario touched on, it would be amazing to have bilingual employees due to the fact that Orbis is a multinational company. So if we have employees that are able to be structured into the company culture that Orbis has created all around the world, they can move offices and see what happens in the Hong Kong office or the Vancouver office, and bring that to Japan, and really incorporate both visions, the North American culture and the Japanese culture, and understand what needs to be done in order for the Orbis venture to be successful in Japan. And then we're going to start marketing the campaign in Japan. That's really structured around the fee that's with Orbis right now, and we see that as being very appealing to potential investors due to the fact that you're only taking 50% of the capital gains that are made off the investments, and if there are no capital gains made, you won't be taking a fee. So that could be very appealing to many investors, especially in Japan, due to the fact that they are attracted to long-term investments, and they haven't seen that from other firms that are doing business right now in Japan. And then heading into the later part of 2016, you will become a Type 1 regular member, sorry for the typo, in Japan with a GST regulatory framework, so that you will be able to enter the investment market for retail securities. Now, heading into the long term, which is 1 to 5 years, we'll look to open to fund Japanese population, and that means that you will cater to the Japanese population with your securities, and really focus on that fee structure again. Show that you're different than the other firms that are operating in the market based on the fact that you're only taking 50% off the capital gains. And then look to grow fund value to $150 million, 5+ years. We have appendices with a revenue growth model that shows that you'll have about $107 million in the next 5 years. But we want to touch that $150 million in the 5 to 7 year range. And the possible expansion into other Asia Pacific countries. You already have an office in Hong Kong, and with this expansion into Japan, you'll be able to see other emerging economies like Singapore and Southeast Asia, where there's abundance of potential for the services that you're able to provide. Now, heading into the risks and mitigations. What if the marketing program is stagnant? Reallocate those funds to original position, or in the UK, or into North America, and then fire the Japanese staff and take those costs as a write-off. Orbis does not deliver the 5% market return. So continue investments in Japan and look to hire an expert Japanese analyst. The conclusion. Just to sum it up, Japanese market is attractive. There's about 1.2 trillion yen in the retail investment market right now, and for you to take advantage of that, that is amazing, and it will help grow your fund even more and build a lot of attention around the Orbis market brand. And that being said, I want to thank you for your time and open the floor up for questions.
Can you explain the rationale behind transferring $10 million of 11 billion assets into Japan?
Yeah, so I mean, it's just basically selling some holdings that you have in North America or other positions in the UK, and just kind of allocating that money into the Japanese market, into Japanese securities.
I know you mentioned that the investment will be negative over the next 5 years.
Right.
Did you determine when the investment will be recouped?
Yes, that's an excellent question. Due to the importance of this, we looked at just a 5-year. However, the growth was back to the next back. The growth was a lot higher than acquiring another company. Later on, if you'd like, I can take you through what a 10-year or possibly a 20-year will look like, but we currently do not have that in our appendices.
So as a follow-up question with respect to your growth rates, they're really quite high. Just wondering on what basis you justify those double-digit growth rates? And similarly, if you could just address how you arrived at your discount rate of 7%, please.
Yeah, so the growth rates were structured around just estimated numbers based on the population of Japan and seeing how many customers we could possibly get with this new venture. And then the discount rate is 7%. Again, that's an educated estimate based on current growth rates in the Japanese economy and whatnot, and also looking at other factors associated with that.
Yeah, just to touch base on the discount rate, we think that 7%, you know, with rising rates in the States at this point, and you know, you have the kind of QE major economic situation going on in Japan, but we feel that there's a little bit higher risk than the kind of risk-free situation, and we think the risk rates are going to go up. So we thought that 7% was appropriate in this circumstance.
Given the performance fee is based on beating the market or the benchmark, do you think allocating so much funds into this venture is riskier than projected?
So there's definitely risks, I mean, in any market, right? In the North American market, we see some major turmoil on Friday, right? So I mean, in any kind of market, you're going to have, you know, ups and downs. And right now, this is a global fund that's not in Japan, right? So what if you have investors that say, hey, I thought this is global exposure, I'm not in the third world market. So we kind of saw that need kind of from Orbis to kind of enter, if it's a global fund, into this area, right? So just kind of getting that, you know, risk from all these different markets combined.
Do you have any additional detail around your marketing program, $600,000 per year is a big change in marketing? Can you just expand on that for me a little bit?
Yeah, so that was structured around selling that, like I said, the fee structure. That will be really showing through advertisements and whatnot, both your online presence, so how investors can do business online, but also the advantages that they get by doing business online and also working with you besides a competitor in Japan.
Would there be a chosen media that communicates the message?
I think in Japan, due to the high transportation usage there, that would for sure make a large effect. And then using technology, using social media, and using business networks like BNN type of channels that are exclusive to Japanese population.